Hey guys, this is part 2 of the Canadian real estate market update for the month of July, using the most recent statistics available from real estate boards across Canada, which is basically using statistics from the month of June. In part 1, I looked at each city and area individually, and in this video, I wanted to do a little bit more comparisons and showing the data in a different way so you can see how sales varies compared to different cities across Canada. So it should give us a bit of a better overall view on when you're comparing different markets instead of just looking at them on their own. So the first thing that we want to take a look at is basically the total number of sales. So if you watched part 1, you might remember that I said in the month of June there was 40,107 sales across Canada. Well, what this pie chart is showing you is basically what different cities' share of that total sales volume was for the month of June. So you can see that Toronto was sitting at 16.1%. So it's the biggest market by far in Canada. And then the next biggest one is actually Calgary with 7.1% in June, and then Vancouver with 6.1%. We do have a big area that's other of 23.6%. That's basically other markets that weren't captured in all the different cities that I covered. Actually, I missed Montreal. Montreal is the second biggest one with 10.2. So as you can see, if you just combine Toronto, Vancouver, and Montreal, you've got a pretty big segment there. But Edmonton and Calgary both do contribute significantly as well. So even though it feels like Edmonton and Calgary aren't typically represented when they talk about the Canadian real estate market as a whole, they do still have an impact. They just kind of get dwarfed by areas like Toronto and other parts of Eastern Canada. So you can also see that there's Ottawa on here with 3.8% of the total sales in June, Winnipeg with 4.5%, and then I've got Hamilton and Burlington with 2.5%. I have a few whole provinces on here. So like the whole province of Nova Scotia only contributes 3.5%, and the whole province of New Brunswick contributes 3.2%. Got a few other ones on there as well. So that just kind of helps you get an overall view of like when they talk about the Canadian real estate market, the bigger the area on this pie chart, the more of an impact that actually has and contributes to the Canadian real estate market as a whole. So what's going on in Toronto really has a big impact on what they say about the Canadian real estate market. That's their share of the total sales, but let's look at how the number of sales is changing in each of these markets and how it's playing out a little bit differently. So this is the sales month over month percent change comparison. So again, I've got all the different markets here along the bottom, and you can see the first thing that should stand out to you is that sales is down in pretty much every area across Canada. I'm missing the data in a few places like New Brunswick and Newfoundland in this case. There's only a couple exceptions. In Winnipeg, the number of sales in June was up 4.3% compared to May, and in the Durham region, it was up 5.7% compared to May. Everywhere else that I kind of checked out, it has negative sales growth essentially. But there's still pretty big difference here. Like you can see that, London and St. Thomas, the sales are down 21.5%, Hamilton and Burlington 19.2%, Ottawa 18.3%, Vancouver 16.2%, Toronto is down 11.1%, but the city of Calgary is only down 7.5%, and Edmonton's down 9.2%. And then like Nova Scotia is only down 3.9%. So it does show you that the pace of the sales declining is not quite the same across these different markets. I will also point out that this is also a normal sort of seasonal change. Usually the peak is sometime in the spring. Sometimes it is in June. It was definitely earlier this year. The increased interest rates definitely would have played a role in that, especially in some of these more expensive markets. Once those interest rates started going up, it really seemed to start having a big impact on those markets. But let's take a look at how the sales have changed from June of last year. So the month over month change gives you a good idea on, okay, what's happening with the market like right now, but when you look at the year over year, that gives you a comparison on how is June this year doing compared to last year, which can be a little bit more apples to apples comparison in some regards. And this one, you can still see that it's mostly negative in terms of number of sales, because we were coming off of some all-time highs in a lot of markets in 2021. in terms of number of sales. But in Hamilton and Burlington, their sales volume from June of last year is actually up 37.8%, and Durham is up 32.1%. There's only a couple others that were positive. New Brunswick's up 3.7%, and the Quebec City Metro is up 3%. And then you can see that Edmonton and Calgary are just down a little bit from last year, so 2.5% for Calgary and 4.6% for Edmonton. But then you can see in markets like Toronto and Vancouver, you're getting, minus 41%, minus 35%. Niagara's down 45%. Greater Victoria is also down a lot, and same thing with London and St. Thomas. So this does show you that Ontario and British Columbia are definitely seeing a lot bigger drops in the number of sales this year compared to last year. Whereas in the prairie provinces, it's not like, even though it is down a little bit in a lot of cases, it's not taking as big of a hit in terms of number of sales. I do think that speaks to the affordability in those markets, and that's one of the things that's affecting that. But it really goes to show you that all these markets are a lot different. So if you just talk about the Canadian real estate market as a whole, it's going to be a little bit misleading. I'm not quite sure what's going on in Hamilton and Burlington or in Durham. There seemed to be quite a few sales this last month in those particular markets. They appeared to have a good month. So unless there's something wrong with my data, those two are sort of like the exceptions that are standing out in Ontario. So let's look at the sales to new listings ratio. So this is basically just looking at the relationship between the number of sales and the number of new listings. So, how sales are keeping up with new listings, or how new listings are keeping up with sales, depending on how you look at it. And it's just showing you the ratio. You can see the city of Calgary is one of the strongest markets with a 70% sales to new listings ratio. So sales are really, at least in June, we're really keeping up with new listings. And then same thing with Quebec City Metro sitting at 74%. And then you got markets like Edmonton, Winnipeg, New Brunswick, Nova Scotia, and Montreal, which were also pretty strong, kind of over that 60% range. And then you had a lot of those other markets that we just talked about in Ontario, and where's Vancouver here? Vancouver sitting at 46%. That's still not bad, but it's a lot lower than it typically is. So this just is another way of looking at how the market's shifting in terms of how sales are keeping up with new listings. Next, we'll look at the inventory levels and how that's changing on a month-over-month basis. This is, again, a zoomed-in sort of look, so you can see, okay, from last month, what are the inventory levels looking like? And just in case you don't know, inventory levels is talking about how many active homes are for sale on the market. And this is looking at the percent change, not the total inventory levels. Obviously, if you compare the total inventory levels across different markets, that give you an idea on like how big they are. Again, but this, I just wanted to show the change in inventory levels. So if you look at the month-over-month change, you can see that Ottawa, Winnipeg, Hamilton, London and St. Thomas, Windsor, Victoria, Nova Scotia, those are some of the big ones with really big increases in inventory this last month, meaning they've got a lot more homes that are sort of collecting on the market. Whereas Calgary was up 3.9%, Edmonton was up a bit more, 6.8%. I definitely felt that. Edmonton's my local market, a lot more stuff to choose from, so buyers are a little bit more excited about that, comparing it to earlier this year. But what was surprising to me is that in Toronto and Vancouver, the inventory actually hasn't increased that much from last month. They already had some increases in inventory earlier this spring, and they're up a lot from last year, if I recall. We'll see in the next chart here, but those were a couple surprises just based on what I hear going on in that market. Reduced sales volume. It's interesting that the inventory hasn't gone, like the total number of inventory hasn't gone up that much. So let's take a look at the next chart. So this is inventory year over year by city. So now it's comparing June of this year to June of last year, and the percent change in inventory. And you can see that Toronto had a 42.5% increase in inventory, which is pretty substantial. But then you look at Vancouver, which is actually still low on inventory. They still have reduced inventory from last year, which is pretty crazy considering you've been hearing about price reductions and stuff in Vancouver. They still have an inventory problem. City of Calgary is still sitting at substantially less inventory than they did last year. They're down 21.9%. And then Edmonton is just barely below what we had last year. We're down 3.5% compared to June of last year. So we've had a big swing in inventory, but we're still down. Whereas if you look at how many of these markets are negative, again, you've got basically Calgary, Vancouver, Edmonton, New Brunswick, Newfoundland, and Quebec City But then you've got Hamilton and Burlington, 101% increase in inventory. Kitchener, Waterloo up 165%, London and St. Thomas up 128%, and then Windsor and Essex and Durham all over 90% increases in inventory. So those are some big swings that really changes the balance of those markets compared to last year. It just shows you it's a lot different depending on which market you're in. Those are some pretty big differences in terms of active homes that are for sale and how much it's changed over the last year. Now, if we look at months of inventory, this one is looking at basically how many months of inventory are left before all the homes are sold, assuming that the homes are selling at the same pace that they were in the current month and that no new homes are listed. So it's basically, you know, how much would it take for us to run out of homes if we didn't list anymore and sales stayed at the same pace? And you can see that Vancouver's sitting at 4.3 months of inventory, which is definitely a big increase for them. And then the biggest one was actually Newfoundland. Not quite fair because you're looking at the whole province. And you can see like Edmonton sitting at 3.1. That's gone up a fair amount, but it's still in a territory, at least in June, where it's, you know, balanced at that sort of level. And then you've got places like Calgary that are still sitting at 1.9 months of inventory. Ottawa as well. Winnipeg's at 1.9. Durham was sitting at 1.5. So you've got a different mix here that definitely varies by city. But again, one thing that's sort of surprising is Toronto sitting at 2.5 months of inventory. I would still consider that pretty tight inventory levels, but we know that they've had price drops in Toronto. So even though you can still have an inventory problem, but you can still lose value in your home in those markets, which is just crazy to me. Coming from Edmonton, if we were sitting at 2.5 months of inventory at the pricing levels that we have right now, I don't think we'd be seeing price drops. But in Toronto, where you've got very inflated values or very high values compared to a place like Edmonton, even just getting down to 2.5 months of inventory, you could still have prices drop, which is very interesting to me. So kind of gives you an overall view on the inventory levels compared to how fast sales are happening across different markets. Now, if you look at the benchmark price, this kind of helps put it into clarity as well. You can see like in Toronto, sitting at 1.2 million, same thing with Vancouver, very expensive markets. Durham's over $1 million. Victoria is almost around $1 million, and same thing with Hamilton and Burlington. So you can see a lot of these really expensive markets are basically in Ontario and in BC, whereas you know, the province of Newfoundland, 281,000 or 299,000 for New Brunswick, and then Edmonton sitting at 409,000. Winnipeg at 360,000, and even Calgary's just at 530,000. And this really goes to speak about the affordability, and also explains in my mind why we're seeing a little bit more resiliency in some markets, like in the prairies. I don't think we're going to be quite as sensitive to what's been changing in the market. Don't get me wrong, we've definitely seen a big shift since interest rates have gone up and the markets have really pulled back a lot, and it's pulled back pretty quickly. But I don't think we're quite as sensitive to as big of a price drop as what you're seeing in Toronto and maybe in Vancouver. Just because, you know, when you're buying a $1 million house and interest rates go up 1 or 2%, that has a much bigger impact on your monthly payment than if you're buying a $400,000 house and interest rates go up 1 or 2%. So I think that makes it so those markets will be a little bit more resilient and not quite as sensitive to the interest rate increases. But I still think there's going to be pain, you know, across the board in Canada. It's just going to be felt more in certain markets. So that kind of shows you the benchmark prices. And let's look at how the actual price, this will kind of bring that home too. Let's look at how those prices have been changing month over month. You can see Toronto benchmark price is down 4.5% from last month, and Vancouver it's down 2%, whereas Calgary's only down 0.3% and Edmonton's down 0.1%. So very small shift in prices in Calgary and Edmonton so far. Obviously, time will tell. We'll see if that holds up, but that kind of, this is the kind of data that I look at and it shows, yeah, you know, there's some markets that are getting hit a lot harder right now. And I think it's because their prices are already so high and they're very sensitive to those interest rate increases. Ottawa is down 2.4, same thing with Winnipeg. Then you got Hamilton at Hamilton, Burlington at 5.2% drop. Kitchener and Waterloo 6.8%. London and St. Thomas down 7.8%. Niagara down 4.7%. Interesting that Windsor and Essex is up 0.5%. And same thing with Victoria, is also surprised seeing it up 0.9%. We'll have to see how that kind of goes moving forward. And then Newfoundland coming up at being up 3.5% is interesting as well. But you can see a lot of markets are down more than 2% just in the last month, which is, I would say, a pretty significant change in 1 month. It would be interesting to see how this continues to play out over time. But this next thing we're going to look at is how the benchmark price change has been year over year. So you can see Edmonton and Calgary just lost a little bit, whereas you're seeing some bigger losses in some of these other markets in Ontario. But if you look at the price change year over year, you can see that everything's still positive. So we're still up in every single one of the markets I looked at compared to where we were in June of last year. But you can see, like if you look at Edmonton, Edmonton's up 8.3% and Calgary's up 14%. Those markets are down a lot less than a lot of other markets, whereas you've got like Windsor up 28% from last year. New Brunswick's up 29.7% from last year. Toronto's up 17.9%. So some of these markets are up a lot more. So even though they're losing ground faster, considering how much they're up just from the last year, like they could lose quite a bit of ground and still just be where they were at a year ago, which is pretty crazy. So in that regard, it seems like they have a little bit more room to drop. Whereas in Edmonton, we're up 8.3% for the year. So even though it was a really good year for us, for Edmonton, if we took a 10 or 20% drop in our prices, we'd actually be further behind than we were a year ago. Whereas some of these markets, you'd still be up from where you were a year ago. So it really depends on when you bought. Obviously, if you're in some of these markets that have gone up a lot in the last year, and then they're starting to see 2 or 3% drops on a monthly basis, that's pretty painful. But it's just really interesting to see how much different these markets operate in the prairies versus Ontario and Vancouver. And that's kind of it for the charts I wanted to show in this one. If you want to check out part 1, you can check that one out, and I kind of go through these stats individually for each city across Canada. But hopefully this gave you a little bit of insight on how different markets compare across Canada. If you like this video, make sure to subscribe. You can click over here to subscribe. Let me know in the comments if you want to see more videos like this about the Canadian real estate market, and I look forward to seeing you on the next video. Thanks so much for watching.